What if you invest $100K in the best 5 Fidelity Index Funds? Imagine you have $100,000 sitting in your account, and instead of letting it earn next to nothing, you're looking for a smarter way to put it to work. The goal? To grow it into something much bigger without spending your days glued to stock charts. I'll show you how you can potentially earn $50,000 a year in dividends. Now, what if I told you that investing this $100,000 wisely could transform it into something extraordinary? We're not talking small gains. We're talking long-term potential that could lead to millions in returns. In this video, I'll show you 5 powerhouse Fidelity Index funds that could make this possible. Whether you're looking to earn consistent monthly dividends or build a portfolio that grows over the next 10, 20, or 30 years, these Fidelity Index funds have the potential to deliver, and I'll break down exactly how much you could earn, from dividend income to overall portfolio growth. Picture a future where your investments are working hard for you, generating steady income effortlessly. By the end of this video, you'll know which funds are best for long-term stability, which ones offer solid dividend yields, and how these investments could turn your $100,000 into life-changing wealth. Ready to see how? Let's get started with fund number 5, Fidelity and MSCI Consumer Staples Index ETF. The Fidelity MSCI Consumer Staples Index ETF FSTA offers exposure to U.S. consumer staples stocks, a sector known for its stability and consistent performance. This ETF is managed by Fidelity, one of the most trusted names in asset management. The expense ratio for FSTA is a low 0.08%, making it an attractive option for cost-conscious investors. Over the past 5 years, the fund has achieved a compound annual growth rate, CAGR, of approximately 7.5%. The portfolio of FSTA includes top consumer staples companies such as Procter & Gamble, Coca-Cola, and PepsiCo, among others. The fund's dividend yield is around 2.5%, with a payout ratio of about 60%, indicating a healthy balance between dividend payouts and retained earnings for growth. For an initial investment of $100,000, assuming a 7.5% annual growth rate, the value would grow to approximately $424,593 after 20 years and around $898,644 after 20 years. The total dividend income over 20 years would be around $60,000. And over 30 years, it would be about $135,000, assuming reinvestment of dividends. This ETF can be your key to generating reliable passive income. This analysis highlights the potential of FSTA for long-term investors seeking stable growth and consistent dividend income, leveraging the strength of top consumer staples companies. This ETF provides a reliable means of gaining exposure to a sector that tends to perform well even in economic downturns, making it a solid choice for a diversified investment portfolio. Fidelity MSCI Consumer Discretionary Index ETF. Fidelity MSCI Consumer Discretionary Index ETF FDIS offers exposure to U.S. consumer discretionary stocks, which include companies that provide goods and services considered non-essential. Managed by Fidelity, this ETF has an expense ratio of 0.08%, making it a cost-effective option for investors. The fund's portfolio includes top consumer discretionary companies such as Amazon, Tesla, and Home Depot. Over the past 5 years, FDIS has achieved a compound annual growth rate, CAGR, of approximately 12.5%. The dividend yield for FDIS is around 1.2% with a payout ratio of about 30%, indicating a focus on growth, while still providing some income to investors. For an initial investment of $100,000, assuming a 12.5% annual growth rate, the value would grow to approximately $1,083,000 after 20 years, and around $3,500,000 30 years. The total dividend income over 20 years would be around $24,000, and over 30 years, it would be about $72,000, assuming reinvestment of dividends. This analysis highlights the potential of FDIS for long-term investors seeking growth in the consumer discretionary sector. The ETF provides a reliable means of gaining exposure to companies that tend to perform well during economic expansions, making it a solid choice for a diversified investment portfolio. Fidelity MSCI Healthcare Index ETF. The Fidelity MSCI Healthcare Index ETF FHLC is a passively managed fund that aims to track the performance of the MSCI USA IMI Healthcare 2550 Index, which represents the healthcare sector in the U.S. equity market. The fund has a low expense ratio of 0.08%, making it one of the most cost-effective options in its category. As of the latest data, The fund's net assets are approximately $2.99 billion. The top holdings of the ETF include Eli Lilly and Company, 10.96%, United Health Group Incorporated, 8.28%, Johnson & Johnson, 6.0%, AbbVie Inc., 5.32%, and Merck & Company Inc., 4.45%, which together make up nearly half of the fund's total assets. The fund has a yield of 1.31% and a beta of 0.71, indicating lower volatility compared to the broader market. Over the past year, the ETF has delivered a return of 21.12%, with a 3-year annualized return of 5.99%. The compound annual growth rate, CAGR, for the ETF over the past 5 years is approximately 7.2%. The payout ratio for the ETF is around 30%, meaning that 30% of its earnings are distributed as dividends to shareholders. If you were to invest $100,000 in the Fidelity MSCI Healthcare Index ETF, the value of your investment would grow to approximately $194,000 after 20 years, assuming the same annual growth rate. After 30 years, the investment would be worth around $364,000. The total dividends received over the 30-year period would be approximately $54,000. With steady dividend payments, you can create an ongoing stream of passive income without having to sell your investments. Overall, the Fidelity MSCI Healthcare Index ETF offers a cost-effective way to gain exposure to the healthcare sector with a diversified portfolio of top-performing companies. Its low expense ratio and solid performance make it an attractive option for long-term investors looking to invest in the healthcare industry. Fidelity NASDAQ Composite Index ETF. The Fidelity NASDAQ Composite Index ETF, ONEQ, is a large growth fund managed by Fidelity Investments, focusing on companies listed in the NASDAQ Composite Index. The fund has a net asset value of approximately $6.9 billion and an expense ratio of 0.21%. The top holdings include Apple Incorporated, 12.06%, Microsoft Corporation, 10.89%, Nvidia Corporation, 10.14%, Amazon.com, Inc., 6.66%, and Meta Platforms, Inc., 4.25%. The fund's sector weightings are heavily skewed towards technology, 51.26%, followed by communication services, 14.63%, and consumer cyclical, 13.62%. The fund has shown impressive performance with a year-to-date return of 23.63%, a 1-year return of 40.02%, and a 3-year return of 8.51%. The compound annual growth rate, CAGR, over the past decade is approximately 13.68%. The dividend yield is 0.64%, and the payout ratio is 0.62%. Investing $100,000 in WONK and holding it for 20 years, assuming the same growth rate, would result in a value of approximately $481,000. Over 30 years, the investment would grow to around $1,050,000. The dividend value over 20 years would be around $12,400, and over 30 years, it would be approximately $30,000. This ETF is a solid option for investors looking for exposure to the tech-heavy NASDAQ index with a relatively low expense ratio and strong historical performance. Fidelity MSCI Information Technology Index ETF. The Fidelity MSCI Information Technology Index ETF, FTEC, is a popular investment option that tracks the performance of the MSCI USA IMI Information Technology 2550 Index, which represents the information technology sector in the U.S. equity market. The fund has net assets of approximately $12.05 billion and an expense ratio of just 0.08%, making it one of the most cost-effective options in its category. The fund's top holdings include Apple Incorporated, 19.85%, Nvidia Corporation, 14.04%, and Microsoft Corporation, 14.02%, which together make up 58.29% of the total assets. Over the past year, FTEC has delivered a total return of 44.72% with a compound annual growth rate, CAGR, of 14.92% over the past 3 years. The fund's yield is 0.65%, and it has a beta of 1.25, indicating a slightly higher volatility compared to the overall market. The payout ratio for FTEC is not applicable as it is an ETF and not a mutual fund that distributes dividends. If you were to invest $100,000 in FTech, the value of your investment would grow significantly over time. After 20 years, assuming the same growth rate, your investment would be worth approximately approximately $1,048,000 with dividends reinvested. After 30 years, the value would increase to around $2,692,000, showcasing the potential for substantial long-term growth with this ETF. Overall, Fidelity MSCI Information Technology Index ETF is a solid choice for investors looking to gain exposure to the technology sector with low costs and strong historical performance. And there you have it, the 5 best Fidelity Index Funds to help you put your money to work and achieve long-term growth. Whether you're focused on dividend income, capital appreciation, or a mix of both, these funds offer solid opportunities for building wealth over time. Remember, the key to successful investing is staying patient, staying informed, and making smart, strategic choices. With the right plan in place, these funds can help you reach your financial goals and set you on the path to financial freedom. Thanks for watching, and here's to building a future where your money works for you.